I went down to the floor of the New York Stock Exchange and I was seeking out one of the oldest grey beards on the floor, a guy called Ted Weisberg, who's the head of a firm called Seaport Securities. He's been on the floor for 43 years, and I started off by asking him, what's the key thing about the market today, the way it is, that has changed in recent years? Let's take a look.
Well, it's dramatically different. First of all, over the last 3 or 4 years, we have gravitated to more and more electronic trading. And so even though physically we still come here, and I'm here now 43 years a member, what we used to do on paper pad, we now do electronically. And other than the openings and the closes, most of the business that we conduct for our clients is done through tablets like a handheld computer, and we interface with the dealers electronically as opposed to interfacing physically. And I think the byproduct of all the changes has been a dramatic increase in the daily volatility, which for some people, of course, is terrific, but I think for the vast majority of folks, long-term investors and individual investors, very disconcerting and very difficult to kind of get their arms around, because these swings up 200, down 200, day in and day out, are not clearly what I'm used to, having spent almost 50 years in this business, and I suspect a lot of folks are also struggling with that volatility.
That's a guy, of course, who deals exclusively with the New York and the US stock market. But I wanted to ask him what he was thinking about all this drama and daily up and down out of Greece and Italy and the Europeans generally.
Bottom line is, I think we continue to be hostage to the politicians, both in the Eurozone and in the US, unfortunately. But what happens in Europe seems to almost be trumping everything else. Now, we are exiting third quarter earnings, which for the S&P 500 have been on balance and much better than expected, which has been typical of the last quarters that we've had, the second quarter, first quarter, and going back into 2010 and parts of 2009. So corporate America is doing just fine. The issue seems to be the politicians. There clearly are real problems in the Eurozone which are yet to be resolved. 17 countries, kind of like trying to herd cats, trying to come up with a solution that everybody will accept. And then in the U.S., our economy limps along at best. I mean, it's not bad, but it's not good. We live in a zero interest rate environment, and we're beginning to look more and more like Japan every day. We do have an election coming up a year from now. Perhaps there'll be a change, we don't know. That could have a major impact one way or the other on our markets. It's difficult. It's a very difficult environment. And when we get away from the earnings, which have on balance been good almost every quarter, and the focus turns to the economy and turns to the politicians, which seem to be controlling everything at the moment, it becomes a little problematic.
Okay, so finally I decided to ask him what he thought the chances were that we could have a solid Santa Claus rally, a big firm follow-up into the year and close well into the highs.
Yeah, I think Santa Claus might have come early. I didn't bring my crystal ball with me, Paul, but listen, it's something that people will be looking for. So much of stock trading is psychological. We're getting into the end of the year, and it's Christmas time and what have you. Not that that's the reason to buy stocks, but people, the psychology tends to change a little bit. Having said that, the problems for the market are still going to be what happens in Europe and what happens in the U.S. economically. And without the benefit of earnings, which, as we have stated now 2 or 3 times, have really, on balance, been terrific. Corporate America is in great shape. But when the focus turns to these other areas, which are very important, there's not enough really going on there in a positive sense, I think, to drive the market. So much of trading is based on psychology and it's confidence. And the problem in the U.S. now is there's a lack of confidence. There's lack of confidence on the part of investors, and we see that almost daily in the lack of volume, no matter what the market does. We see it on the part of the consumer, and we see it on the part of corporate America when you look at how flush the corporations' balance sheets are. Trillions of dollars, both domestically and offshore. And that money is not being, at least domestically, not being spent because People are just nervous. Corporations are nervous.
So that footage recorded with my Apple iPhone on the floor. Sorry about the sound quality. That's because he was surrounded by people doing all sorts of talking in the background.